All right, guys. Good morning. Good afternoon from here, 12:58 p.m. How you guys doing? Sorry, I haven't been posting on the YouTube channel. The reason is because I have been on the mentorship. All right. So there is a trade I took. I think long time ago, like BOOM300. So let's see the information right here. So the trade was taken on screenshot was taken on the 18th of January, right? So that was when I did the analysis on Boom 300, and it got triggered when uh, let's see when it got triggered. So we have Boom 300. um, all right, so let us say it got triggered on this day. I had two entries, so January 20th. So it took me 18, 19, 23 days for price to get to that area, and it tapped my point of interest. So this is the progress right now. I took like two positions off from there, and I left this one with this minimal lot size. And I was also taken out right here. So I didn't get to have my fourth entry right here, probably the third entry. So you have seen the before and after, and this is on my MT5 platform, and we are on my real account. All right, this trade was taken on the real account. And what was the analysis? Like, you guys always know that I have this trading habit of trading the way that other smart money traders don't actually trade, and that is what makes me different from other smart money traders. All right, that's what made me different from other smart money concept traders. And the difference, you can see them on my chart all the time. Both my uploads, mostly I upload mostly on Facebook, and on YouTube you always see my confluence, right? You always see my analysis, and you always see me point out these areas of significant support and resistance. So we had an entry right here, and this is something I talked about on the mentorship. I had an entry right here. I don't give signals. Okay, I share setup. So price gave me a sniper entry, and one thing with the KML trading is that it always gives a sniper, and when the sniper occurs, it doesn't give us a confirmation entry. Okay, so this is a swing trade, and normally most of you guys, both those I have been mentoring and those that have been with me on Facebook, you all do know that I am a swing trader. I don't scalp. I don't day trade. I like to hold my trades for a long period of time. My field of trading is in swing trading, not actually um, scalping, or what is it called, day trading. So I like to hold my trades for as long as I can, and targeting this TP right there. And you can see how price is being delivered down close to TP. So I am going to save this because I am going to post on my Facebook page. So I'll like save it live. Boom, 300 TP. So uh, now let's get to business. So first of all, I always say that you should start from your higher time frame. All right, and to know your bias, that is when you get to your higher time frame. So right here, I noticed that a stop hunt on previous high occurred, previous candle high occurred here, and you know it is not actually clean right here. And this is the monthly chart. We do know that the bias on BOOM300 is bearish, and it is not bullish. All right, there's no bullish signal presented right here. So I noticed that previous candle high has been taken out. So previous month high, buy stops resting previous month high has been taken out. Wow, it's just like trading ICT, stops racing on previous month highs and lows. So now we have previous candle high taken out, which is previous month high taken out. And since it is not clean on the monthly chart, I need to see a structure being presented to me. So I ran down to my weekly time frame, and it seems kind of like clear to me right here. because we noticed that it was a liquidity pool, buy side liquidity pool that was taken out right here. So that was like a stop hunt on liquidity pool right here. Before we now see smart the algorithm they support the price to take out support, right? So we are having liquidity be taken out to take out another liquidity, and this is something I teach in my mentorship, that when you're trading smart money concept, you should always have in mind that the reason of studying smart money concept, the main thing of institutional trading is that it takes liquidity to distribute that liquidity to another liquidity that we call a draw to liquidity. Now the basic that other YouTube mentors, YouTube smart money trader will tell you is that price takes support, liquidity on support, and it now trades to take out, take out resistance, and it now trades to take out liquidity resting on support. So I don't know how you get to understand your own that way, or you have your own way of understanding liquidity concept. You know that smart money, what the algorithm does there is that it trades higher to take out stops resting on this high. Then the next target, known as a draw to liquidity, is that after the grabbing of liquidity, it distributes it to the next liquidity, known as draw to liquidity. And the next draw to liquidity is an area where we have support. So we're having pool of liquidity resting on support right here. So we have stop losses resting here. So after seeing that, running down to the daily chart, smart institution does what? Take liquidity to be drawn to another liquidity. So right here, I noticed that even though we are on a range market, we don't trade range market, all right? Because we get to be manipulated. So I noticed what happened right here. After the stop hunt on this high, price traded lower to distribute the price, taking out support, resting here, and we'll now take out our swing low sell stop. All right, after taking sell stop liquidity, it took the sell stop. So now I am looking for my setup, and what did I notice here after seeing liquidity taken out here? And the next thing I observed was that this demand zone was violated. And most of you that trade supply and demand, you know about supply to demand flip. All right, so when trading smart money concept, when trading the smart money way, you should know that your point of interest should be valid when it takes out an opposing point of interest. So a supply is valid when it takes out a demand. You understand? And normally, you know, the smart money setup, I talk about felt highs and lows, and then we also talk about stop hunt plus breaking market structure. So right here, we see that a demand was violated, and we have a structural break, and then sell stop was taken out. So what I notice is that we have a hunt to this high, and then finally we take resistance, buy stops, and we see a trade lower, and the demand was violated. The reason why this demand is not valid is because it is resting in a range market, and we have sell stops below it, and it is an area of what? Liquidity, which is what? Support. So the demand was violated, and price put back to balance price right here, and we now see a structure printed right here. So the structure printed right here was low, high, low, and we are expecting a pullback to the area of supply. Those that trade supply and demand, they pick the wicks as a point of interest. So I need to see something clear, my setup, so I keep on refining, and I noticed that on the 12th hour, I noticed that price did mitigate the supply that violated this demand right here. So I say, okay, that is a confluence, all right, since it mitigated the supply that violated demand. So I have to have like a confirmation entry, and what is the confirmation entry is that we see price mitigate supply after taking adjustment right here. So I noticed that after that there was a demand, a demand right here that was also violated because price tapped the demand. It gave us a little bit of reaction, and we now see it violated. Now after that violation, what I used to look for the supply that violated demand. So I mapped out the supply zone, but then, you know, we are trading risk management to have a minimum stop loss. So I keep on refining. I need to see my setup, and I ended up on 8 hour. Then I refined down to 6 and right here it is actually clean. You can define up to here, or this one. I'll choose this one right here. Then from there I run down to 4 hour and I refine right here. Now before I choose this point of interest to execute my trade, I notice that I have, after I see that we have a stop hunt right here and price field imbalance right there, so I will say I am safe. And the next thing, the confidence, is that a demand, another block was violated, so, and the position on the block was printed. Now putting that aside, we have structure here where we have high, low, right here. When you tap the demand, I will now see a failed high printed right here before we see imbalance created and the demand was violated, giving us then a structural break, and we have a major low taken out right here. So after seeing that, I mark my advanced KML right there to use as a confluence to my what? Failed low, right? So my entry was at the KML right here. So right now, putting that aside, an extra confluence is that we also have an area where we have significant support and resistance. So it is now my confluence that we have a failed high, significant support resistance KML right there, and advanced KML, then refined order block being violated. So that is a confluence. Now we now have change in character right here, and we now have our demand violated, which is a good thing. There we now have validation of this low and the major low right here. So after that, I am to conduct what? Liquidity assessment. And my liquidity assessment was that when price put back, I had a significant support and resistance right here, which is retail traders trying to trade support and resistance without knowing that they're creating pool of liquidity. So they tell you that area tested multiple times tends to be a strong area, and if price gets there, it will be used as a resistance because it is tend to be strong. But put that into reality, you will know that if you hit a hammer, if you hit a wall with a hedge hammer, like the wall is actually strong, and you keep hitting it continuously, it makes that wall to be what? Weak. Put everything in the market in reality, in business, how you operate in your business. All right, this is the market, so you should actually treat it that way. Area pre-tested multiple times makes it weak. So probably when you hit the hedge hammer on your wall, probably at the 5th time or the 3rd time, you will see a crack on the wall. So that is just how it is on the market, right? Area support and resistance, they deceive you, that say that it is tested multiple times makes it stronger, but it actually makes it weak. All right, and you have a stop loss resting here. So what does that mean? You're having pool of liquidity resting on resistance, right? And then you're having buy side liquidity pool, and you have this buy stop resting here. So that is, can be used as an inducement, and you can also use this whole thing here as a supply zone. But due to the fact I had KML, I refined it down to my KML in line with significant support and resistance, and it failed high. So we have significant support and resistance, so we see that as a fake out zone. All right, so we have arrow 1, arrow 2, arrow 3, and S1, S2, S3, blah blah blah, stuff like that. So we have fake out zones, we have our inducement above it, and the main thing is that the origin start from here, where we have a, what is it called, imbalance after a fail high, change in character, and a break structure. So what the price did here, it came to resistance again, it sold, right, and it violated those are resistance, taking out their what? Stop losses. Now after it takes out the stop losses, breakout traders are now activated right here. So the idea is that what they do is that they wait for a break and retest, in which that is what the market did here. So the market breaks, it retests to resistance, and start buying. So someone that has the buy stops or breakout traders are being activated right here, right? So now it is now used as resistance. Price keeps them happy for a while, but then they did notice that what? The institution are above what? Liquidity. The institution are above what? Retail traders. And what the market is trying to do is to balance this imbalance, sell-side imbalance, and then mitigate our order block. So it mitigates the order block and it starts to sell. So you that were happy at this moment, you'll be taken out either on break even with small little profit, or you're being hit on your stop loss. Because I know you have the idea price wants to continue trading higher, and with the other mindset that you're having, triangle stuff like that, ascending triangle patterns, stuff like that. And yeah, so in smart money concept, since I have my point of interest, I conduct my liquidity assessment. I'm not conducting my draw to liquidity, which is what these areas. So what did market do? Start me at my QML significant support and resistance, and then we now see it trade lower. The other block is in line with significant support and resistance. So now see trade lower, takes out break and retest trader, and now we are not seeing it using support and resistance, that area. And I was thinking to have a confirmation trade here. With the idea we have a stop hunt plus break of structure and have another fake out zone, liquidity area above me and below me. So I wanted to enter here, in which it did not meet my criteria, it did not meet my setup, which is what I should find it mitigates previous other block, and maybe come out significant support and resistance in line with my other block. But what actually happened is that price takes me out, and I'm cool with that. I still have my entry right here, so it takes me out, and then we now see it drop just like magic, right? So I hope that my content is really educational and you actually get to see how I do my analysis quite different from others, right? And I'll be seeing your comments, and I really appreciate your comments and those that subscribe. So I hope if this is your first time, I wish that you subscribe to my channel also, and you comment, and yeah, follow me on Facebook page also. I'm not active there. So right here I could have had another entry right here as a confirmation trade, but I am not always active on the chart. As long as I am a swing trader, once I am tapped and price is being distributed, I am leaving the market and to check maybe once in a while to see the progress. So if I could have another extra confluence to enter this trade for a confirmation entry, I could have extra break of structure, and this was the supply that took out this low. And to validate that also, we know that we have another block also that was violated right here. So you are now having a demand to supply flip. So the demand violated, this was the supply that took out the demand, and price put back to mitigate that area after doing what? Taking out inducement. So always have liquidity around your point of interest. So we now see it tap the supply zone, and we see it rally downwards, right? So we have supply to demand flip right here. So let me just continue to refine to see if find something clean. So this was the last candle. So that is, by the way, probably I will not take this trade for my own reasons, but you will know that you have a demand to supply flip. So and a break of structure, so price trades to balance and mitigate or supply after taking an inducement, and we see how it drift, right? And what this is approaching to sell stops, which is where might take profit. So I hope that this video exploration and trade entry and analysis helps a lot. So yeah, thank you guys. See you guys next time. And I don't know when next I'll be posting on YouTube because I'll be busy with mentorship. But you can follow me on Facebook page. I am more active. I post setup on my Facebook page. So take care and stay safe.